Hey guys, in today's video, I'm going to be going over some simple, effective due diligence for any real estate transaction. So let's dive on in. All right guys, so going over here on some simple and effective due diligence, the first thing I would suggest on due diligence is a market due diligence. So just make sure you pick a market that is good for you. Locally would be the first place to start, or within an hour radius of where you are. If that market doesn't make sense in terms of cash flow or kind of rental or anything, rental comps or anything like that, then you can start looking nationally. And when zoning in on a national market, anywhere, out of state, you're going to want to make sure the market has good growth and jobs, that it has great cash flow, makes sense, and also go and physically visit that areas of that market, check out the sub-market, know what's going on in all the areas of town, drive the streets, get a feel, make sure you're comfortable with that. So that would be the first thing. Okay, so other simple, effective, especially if it's for a turnkey provider, would be a property management due diligence. So go visit that property management company, see how many people they have, check out their processes, ask them what their average rents are, their turnaround times, what their processes are for investors, look at their property management agreement, just really vet out all those things and see that they're good. Look at the Google reviews on their property management company, give them a call, see if they answer the phone, those basic things. So vet the PM. Next would be due diligence is a home inspection. Okay, make sure that you get a home inspection, a third-party home inspection, to make sure the house is in good structural condition. That's a big thing. The plumbing and electrical is good, and the mechanicals. So the big four is the roof, mechanicals, flooring, water heater, and ACs, okay? So you're gonna wanna check out all of those things. Make sure they're in good shape, not too old, everything like that, or if they're newer, even better, check for hard surface flooring, and also cosmetic issues that need to arise on it. So that'd be a good, simple due diligence. Another due diligence would be title insurance. So a great way to hedge against a lot of risk is make sure that title's clear and that you're getting a title that's free and clear of any encumbrances and all of that. So title insurance allows you to have that even if that title company messed up, the title insurance will cover for that. So watch out for any phony title insurance companies. Make sure you're wiring. Yeah, another thing is make sure you're wiring correctly. Call the title company, make sure they're legit in that area of town and have a business profile and the attorney and all these license numbers to make sure you're wiring the money correctly as well. There is wire fraud out there as well. Okay, so next thing you're gonna wanna do is visit the track record of the seller. So especially for turnkey, the track record. How many deals have they done a year? How long have they been in business for? Do they own the property management company? That would be something to ask. There's pros and cons to that. I would definitely say it's more of a pro for them to own the property management company because they have alignment of interest. They can't be blaming each other because they own both of them. So the blame ultimately falls on that turnkey provider. Check out their Google reviews and their track record. Make sure everything's good and dandy with them. Really look at their website, vet what they're doing. Make sure they're transparent, okay? 6 would be rent comps. So vet the rent comps nearby. Bed, bath, square footage within the same range, within the same mile radius. See what's renting in that area and that the rent comps aren't too high or too low and that those are making good sense and lining up and all that. Better yet would be if the property management company manages 10 or 20 units nearby and can pull those really quickly because they already know the data and what's leasing or not over in that area. So hopefully that property management company has a lot of experience and all of that, but I would do your own. You can use Rentometer, Zillows for free, other things like that to kind of check out rent comps. Other due diligence would be after repair value, so basically just comps in general. So making sure the property is worth what you're paying for within a decent reason, making sure all that is up to par. You don't want to be overpaying too much for a property above what the average house is worth in that area. It's not terrible if it's really fixed up nice to pay a little bit of a premium for a property, because a roof can be tens of thousands of dollars, HVACs, water heaters, and all that. So factor that into your comps. If a house nearby doesn't have those things, you probably would pay 10 or 20 grand more for a house according to those things. Use your tactfulness there. Lastly, I would do a numbers dive. So I would dive into the numbers on the property if it's going to be a rental or a flip. But for a rental, check out the vacancy, the maintenance, the taxes, the insurance, making sure all of those things are lined up within reason on expenses, not too conservative, not over conservative. Definitely need to run through the numbers yourself, making sure everything makes sense, making sure it's a good return that you feel comfortable with according to your best projections. So number 9 would be insurance. Yeah, make sure the house is insurable. Number 1, make sure you get insurance when you buy your property. Too many times, you don't want to buy a house and 3 days later a tree falls on it and you don't have insurance. So make sure you get insurance. Typically, when you're getting a loan on these properties, you're going to have to get rent and ARV comps from the lender. The lender's going to want you to have title insurance, and the lender's going to want to make sure you have home insurance. So getting a loan is probably one insurance safe way, making sure that it is loanable. So making sure you loanable. I think that's a new word I just made up, but just make sure that you can get a loan on the property. If you want to buy cash, that's fine, but just make sure that you do have that option. Because some turnkey providers, they might be a little fishy if they're like, hey, you just got to buy this one all cash because of X, Y, Z, or they have no reason, it's just cash only. You want to make sure you can get a loan, because that makes sure that kind of checks all these boxes and makes sure those things can happen. So anyways, there is some simple, straightforward due diligence you can be doing to mitigate your risk, to make sure you're investing wisely. These are the basics of due diligence. Of course, us at Memphis Investment Properties, we buy and sell 250 turnkey houses a year. We do all this due diligence up front and actually provide it for you very transparently on our marketing packets so that you can really just go and check, verify what we've done. It's for you to check out and use at your own convenience. And yeah, so that's what we feel like doing for you to help you out and progress you on your way towards financial independence and retire early. Thank you so much, guys, for watching this video. Subscribe to our YouTube channel. We need your help. Comment, tell your friends about it. Tell your mom, your grandma, your friends, your dad. Thank you. Bye-bye.